Deductions from gross total income. While computing the total income of an assessee, some deductions are allowed from the gross total income. So how we are going to get the gross total income? By adding income from salary, income from house property, and profits and gains from business or profession, and income from capital gain, and income from other sources. And by making some clubbing and aggregation and set of carry forward losses, then we are going to get the gross total income. From the gross total income, we are going to deduct the deductions from 80C to 80U, and those are: number 1, 80C qualified savings. Deductions are allowed up to 1,50,000. It means that in the question, whatever the actual amount is given, that will be compared with the limit of 1,50,000. For example, the actual amount is given 80,000 and the limit is 1,50,000. So therefore, which is the least one? The 80,000 will be allowed as a deduction under 80C. Suppose the actual amount is given 1,70,000 and the limit is 1,50,000. In this case, the 1,50,000 is the least one. So therefore, 80C, it will be allowed 1,50,000. Number 2, payment or deposit in respect of pension fund 80CCC, whichever is less from the following: actual amount paid or deposited, and that is also compared with the limit of 1,50,000. Whichever is least will be allowed as a deduction. And payment for pension fund to the government and other employees 80CCD, and the limit on the deduction of 80CCE, which is an aggregate of 80C, 80CCCC and 80CCD, and it will be compared with the limit of 1,50,000. Whichever is less will be allowed as a deduction. And 80D, medical insurance premium. So whichever is less will be allowed as a deduction under medical insurance premium, and that is for own or himself, spouse and children. All together it will be added and the limit is 25,000. Whichever is less will be allowed as a deduction, and it will be allowed for the parents whether they are staying with him or not, dependent or not. Whichever is less will be allowed as a deduction. Actual amount paid and the limit 50,000, and maybe the senior citizen or super senior citizen. And whenever this medical insurance premium paid in cash, the deduction cannot be allowed. And here the prevent health checkup expenses will be given up to 5,000. If they paid in cash also, a maximum limit of 5,000 will be allowed as a deduction under 80D medical insurance premium. And deduction in respect of medical treatment and maintenance of the dependent who is a person's or disability, the section 80DD. So the here the dependent person, whether it means a normal disability or the severe disability, we have to check. If they are having less than 80% disability, the 75,000 will be allowed as a deduction. If they are having more than 80% of disability, then 1,25,000 is allowed as a deduction. And next, the deduction in respect of medical treatment of chronic specified diseases like AIDS, cancer and tuberculosis, etc. So here whichever is less than actual amount spent, and the limit for non-senior 40,000, for senior 60,000 and super senior 80,000. Whichever is less will be allowed as a deduction. Interest on higher education loan, actual amount paid for an interest will be allowed as a deduction. Whatever the amount is paid, you will get the deduction. And interest on home loan, and here for the home loan already we are giving 24B under the calculating the income from house property. Along with that, the remaining amount up to 2018 to 19, 2 lakh is will be allowed as a deduction under interest on home loan. And donations, there are some 50% donations are there, 100% donations are there, like National Relief Fund, or for example if it is an 100% donation, if they are given suppose 6,000, 100% means 6,000 into 100 by 100, the 6,000 will be allowed as a deduction. If it is a 50% donation, for example 18,000 donation is given, 50% means 9,000 will be allowed under section 80G. And the deduction from the rent paid 80GG. So here you have to calculate whichever is less from the following, that is rent paid minus 10% of adjusted gross total income and 25% of adjusted gross total income, and there is a limit of 60,000. First we have to know what is an adjusted total income, gross total income. So here means the taxable income is less than the long-term capital gain as well as the short-term capital gain on shares, and the deductions from 80C to 80U will be deducted. Then we are going to get the adjusted gross total income. And donations for scientific research or the rural development section 80 GGA, an actual amount donated will be given as a deduction. Donations to the political parties section 80 GGC, actual amount donated will be allowed as deduction. Royalty income of authors of the bank section 80 QQB, with a lump sum amount whichever is less from the following: actual royalties received and 3 lakhs, and royalties received in India not in a lump sum whichever is less from the following: actual royalty received and 15% of the value of the books sold, and the royalty of income of patents of 80 or B whichever is less, an actual amount received and 3 lakhs. Interest on savings bank account 80 TTA whichever is less from the following: actual amount received and 10,000. For example, actual amount is given 8,000, the limit is 10,000. Therefore, the 8,000 will be allowed as a deduction. For example, if the actual amount is given 12,000, the limit is 10,000. Therefore, the 10,000 will be allowed as a deduction. And interest on deposits to the senior or super senior citizens under section 80 TTB. So here actual amount received and a limit of 50,000. And blind or physically challenged handicapped persons under section 80U, and here the disability is 40% or less than 80%, the 75,000 will be allowed as a deduction. If the disability is more than 80%, 1,25,000 is allowed as a deduction.